Hello, everyone. This is Kavita Agrawal, and as promised, we are going to start with the 100 Days of Stock Analysis series. So, the whole idea of this series is not to bring to you anything new. Honestly, I am going to be repeating the same momentum, same trend line, same workflow that I have been talking about in my market outlook in my Let's Get Technical series. But in this is going to be backed by stocks. You are going to see how consistent I am with the way I analyze stocks. And every time I'm going to analyze stocks, if you pay enough attention, you will also see that I try to do things a little bit better than I did in the previous session. If you want to be successful in the stock market, continuous improvement has to be the name of the game. And with that, let's get started with the very first stock, that is Havells. Let's see how did I pick up this stock and how has it performed since then. Going forward, I will also share with you stock analysis with absolute forward looking outlook. So, this stock Havells was actually picked out by me on the 28th of January, and I did not get time to record the video until today. As many of you might know, I am a new mother. It's just been 9 weeks, so I'm still adjusting to life with a lot of new components in it, namely my baby girl Ava. And these days, as much as I want to make more content, it is becoming a little bit more difficult to do that because of unpredictability of my availability. But anyway, so we'll start off with Havells. I'm going to share my screen and we will take things from there. All right, so first thing first, the 100 days of stock analysis by me, all the stocks that I will be covering are going to be maintained in this sheet. So this sheet's link I am going to share with anybody who's interested in having it. And you can find this link on my Telegram channel. So this is my Telegram channel, Trade with Kavita. This will be linked in the description. And what I will do is follow the 100 days of stock analysis series, shooting the first stock, Havells, NSE Havells. So I want the link. Bookmark this Google Sheet because I will be tracking everything here pertaining to this series. Okay. So this is where you're going to find it. I will also pin this to make it convenient for you to find it. So you can just go to my channel and click on this link, click on the pin to find this message very easily. All right, so Havells was spotted on, like I said, the 28th of January, and I came up with a setup on that. So we will assess how I came up with this setup and do things in a systematic manner. So this is my typical layout, but for the purpose of this analysis, I want to do the analysis from scratch for all of you. So we are going to not sure if my camera got. All right, I can see things better now. All right, so here let's open up Havells. And I will go ahead and I will remove all drawings here. So, okay, so I have kind of stopped using the 6 chart layout because like I said, I no longer have time. So I am all about optimization. So 15-minute, 75-minute, daily, weekly is what we are going for. And I'm going to save this and let's go full screen. So let's start cleaning up the drawings. Remove 9 drawings. And okay, awesome. So we'll start with the largest time frame and assess the trend first. So look at this chart of the weekly time frame of Havells. So let's start off with identifying the latest uptrend that's unfolding. So I want to look at, so this is where the last correction kind of ended. This is where the first higher high was. What is this? First higher high was established. What is this line? Oh, that's a. So this is where the first higher high was kind of established. Oh, there's an alert there, and I've moved that alert completely. Anyway, so this is where the first higher high was established beyond this point, and then a new rally began, right? So now this was the low of this correction. So what I want to do is I want to take trend line by pressing Alt T or Options T if you're using Mac and draw this line, okay? Next, I want to clone this by using Command or the Control key, click and drag. And why am I drawing these parallel channels? The idea is to identify the trajectory of the unfolding trend. So if you go to a major city, you see the traffic doesn't move in a single lane. There are multiple lanes. Same way, when the price action unfolds, it doesn't unfold in a single channel. It has a multi-lane kind of channel. And typically when the resistance gets breached, for instance, you saw the resistance get breached here, the price tends to go up and retest the next resistance. So you must have noticed that in drawing my channels, I actually use the important peaks and bottoms of this price action or the price action in this zone, which is prior to November 2022. However, the recent peaks that have been forged in June 24 and September 24 adhere to these trendline resistances really, really well. Okay. So this is the latest trend trajectory that I can see over here. The support was breached for a moment, but it went back up. Now, what is this blue line that you're seeing? This is the 250 EMA of the 1-day time frame, and it is very important to us. Why 250 EMA, not 200 EMA? 200 EMA is obviously very commonly used. 250 EMA is basically like the 200 EMA, is just reduces more noise than the 200 EMA does. So that's why I prefer to use the 250 EMA. So on the weekly time frame, why am I using the 250 EMA of the daily time frame and not any other time frame of the weekly itself? Because when it comes to using the EMAs or the exponential moving averages, I try to keep a consistent view, and that is the EMAs of all the EMAs that I use across my study are only from the daily time frame. Because see, if I'm using a 20 EMA on the daily time frame and 100 EMA on the 75-minute time frame, they give me a different perspective. But like it to my brain, it says it's a different perspective, but they are actually exactly the same thing. So 20 multiplied, so 75 in a day, there are 5 75-minute candles, and 20 EMA on the 100 EMA on the 25-minute candle converts to a 20 EMA on the daily time frame because of the multiple of 5, factor of 5, right? So pretty simple math. I explain this on a lot of details for all the moving averages that I use in my advanced swing trade training program, about which I will tell you in more details at the end. So here we have identified the trajectory. Now let's look at the momentum on the weekly time frame. RSI on this weekly chart is showing us that it has been consistently testing and then turning up from the level of 40. So this indicates to us that there is a very strong underlying bull trend. What happened here? Here we saw a peak out, there was a small negative divergence, and within the bull trend there was a correction. How do we know that? Because firstly, this high that was forged against this, the RSI forged a lower high, right? And then next time the price came to kind of retest this level, it took resistance from there until it finally broke out. Now, look at the coincidence. When it finally did break out, the RSI also forged a higher high. Now, this is not a coincidence, okay? This point onwards, so here you see, this is the previous high before the actual high was forged. This zone became an important support zone, which the stock did not really sustain below. So thrice the stock bounced back up, retested the resistance, came back down, again retested this intermittent high, right? And then gave a breakout upward. What happened on the RSI front? The RSI kept testing the level of 40 but not sustaining below it. And here it started breaking above the level of 60, indicating that bullish momentum had started to build up until finally the bull run actually began. So right now, what are we seeing? Right now we are seeing, so if you look at so this is the peak, right? So coming to the most recent price activity, we see a negative divergence was forged here. This negative divergence indicated what? That a potential correction is coming up. Now, where would we expect the potential correction to go? There are two potential zones. One is the trendline zone, which has already been tested, the trendline support. And next is this previous high. So I can see that this previous high has also been tested and the stock has gone up. Now, let's move down to the lower time frame. Now, on the daily time frame, what am I seeing? Between this bottom and this bottom, I will be right back. All right, I am back. Baby girl was crying, so priorities. Okay, so on the daily time frame, what we notice is that there is a positive divergence, and this is not the first positive divergence that was formed on the chart. A small little positive divergence was forged here as well on the 14th of November, after which the stock gave a temporary rally. And look at exactly where this rally terminated, and this is important. It terminated right where the price had taken support before establishing the actual peak, right? The price peak, not the momentum peak. So the momentum peak was forged here, and then the price peak was forged. So the momentum peak is where the RSI peaks out, and these are my own terminologies. And the price peak is where the price peaks out. And because there's a negative divergence there, we can see that there is a correction that followed there. Now, why is this level important? Now, after the momentum peak is forged, the support level that is often seen in the market, the support level from which the price peak gets forged, when the correction unfolds, the first sign of positive divergence or the first sign of positive momentum that is forged often sees resistance right where this support was forged from which the price peak was formed. So this support, because of the rule or principle of fungibility, has now become the resistance. Okay. Now next you will see is that the price then declined to the next support, which was the peak prior to the momentum peak, which is over here. So basically this is the support level, and then this is also the support level. So since the price has broken below this, so price temporarily broke below this trend line as well as this support zone. But on the RSI, what are we seeing? The RSI has been sustaining itself above. So this is where the RSI was last seen making the bottom. Now, if you see the next lowest bottom of the RSI, that is this level, is actually higher than the previous RSI bottom, which means there is a positive divergence, right? So a lower low in price versus a higher low in RSI is equals to positive divergence. Correct. Now, between these two bottoms also, if you see, there is another positive divergence. So the shift in momentum it doesn't happen like at one moment. It kind of keeps happening until the scale actually shifts in the favor of the bulls. Now here you can see this blue line, the 250 EMF, the daily time frame, has acted as a resistance. So now what we will do is we need to go another time frame lower and see what the 75-minute time frame is doing. Now, before that, let's go back to our sheet. So on this sheet, as you can see, 28th January is when I identified this stock. So this is where I identified this stock, 28th January. Why? Because again, on the 28th January, sorry, I am pressing the wrong keys. Yeah, 28th January, there you go. All right, so what happened on the 20th January? I made these observations on weekly, daily, and now let's go back to the 75-minute time frame, go down to the 75-minute time frame. you will see there also there was a massive positive divergence. And this was an important positive divergence, one that we could take action on. Why so? Because the right side of this positive divergence sustained the level of 40, correct? And then if you see the rally that ensued was pretty sharp. It was 13% in just 5 days. All right. What is next? So for the stock to, so from a 75-minute time frame perspective, I would say that the target of this positive divergence has already been met. I would no longer buy the stock based on this positive divergence. However, there is another observation on the 75-minute time frame, because of which I might still go on the long side in this stock. And what is that? Look at the ranges. So in order to do the RSI range shift analysis, it's prudent to completely zoom out or zoom out as much as you can. So here you will see the RSI has been sustaining the level of 40. Draw a line there. Okay. Now see where it coincides with. It coincides with this point, which is the high after a rally. However, the RSI here has started to resist the level of 60. Okay. Which means a negative divergence was forged. Here we can see a negative range shift in the RSI corresponding to that negative range shift, or the period in which RSI was resisting 60 and breaking below the level of 40. What has happened? The price in Havells has declined. Again, what happened? At some point, the level of 60 was breached. Havells went up. So over there, I will draw a line on the level of 40 until the level of 40 was breached. So there was positive range shift or positive momentum unfolding until this point. Now, what happened beyond this point? A high was forged and this key low once. So over here itself, you see this peaks support, or this entire support. In technical analysis, honestly, everything is just coinciding with everything. So this point where the level of 40 was forged, this is the correction beyond the breakage of the support, right? And then this support zone itself acted as resistance and the price continued to decline. Okay, so this was the negative range shift zone. And coming now, so here the level of 60 has been breached. So I am going to draw this, and here again I see level of 60 getting resisted. So negative divergence, which means a negative range shift. And look here, we have again moved to the positive range. Now, whether this is going to continue, whether this was a one-time thing, we don't know yet. But what is the nearest resistance zone? This is the nearest resistance zone. So I would expect that because we are still sustaining, we are still in a positive zone, I am going to look to make a position when the stock approaches its nearest support. Where is the nearest support? It is here, this green zone which we have marked earlier. So you see how I'm building the investment case from the largest time frame all the way to the smallest time frame. If you straight away look at 75-minute time frame, all these insights are not going to become obvious to you, right? So I have drawn the line, but let me change the color to maybe this. Okay, maybe orange. Okay, so this is the potential support zone where I would like to enter. Now, if I do take an entry at this zone right now, where would my stop loss be? Naturally, the low that is over here, correct? And where would my target be? My target would be minimum, the first target would be somewhere over here, and the second target would be this trendline resistance. Now, this trendline resistance coincides with another key resistance or slash support zone, which is here. So I am going to draw another line here. Now let's assess the risk reward ratio of this setup. Okay, so the first one is this. I can see the absolute risk on this position is 6%, which is approximately 6.2%, which is a little bit higher than my comfort zone. So what I will do is I will try to set a buying order or a buy GTT order slightly lower at maybe 1548, right? Because you see I just moved this line lower and I will shift this higher. So now my risk reward ratio even on a conservative target is 3, which means this setup is a go from my end. Okay, When this target is approached or is very close to being approached, that is when I will start revising the target. Until then, I will keep revising my stop loss, trailing my stop loss. How am I going to trail my stop loss? If this price does decline all the way and trigger my purchase zone without triggering my stop loss level, right? Then when the stock goes back up and crosses the next visible resistance zones on the 15-minute time frame or the 75-minute time frame is when I will start trailing the stop loss. So what I will do is I will set up these alerts and okay, so 100-day entry. So I'm gonna write 100-day because I typically don't use this layout. My layout has my own drawings, my own notes. So I didn't want to kind of show you something that was already pre-done and confuse you. So 100-day entry level touched. Okay. So in my Telegram channel Trade with Kavita, I am going to post updates about when these stocks achieve these alert levels, right? And I will also update the Google sheet that I showed you, which is basically this one here. I will do that. So if you're interested, naturally join my Telegram channel if you want those updates. 100-day crossing line. Okay, fine. That is good. Next, I will create an alert on this and I will call it 100-day and stop loss triggered. Okay. And another thing that I also want to know is right now the price is here, right? If the price goes back above this high, this resistance, you see why this is a resistance? If it goes back above this resistance is when I want to know that a 100-day higher high has been achieved. So I will set this alert. Okay. Now I will no longer look at it. When will I look at it? So this trade setup, basically, I will also be sharing this trade setup in my Trade Together program and sharing trailing stop losses there. So if you want to trade with me actively, because see, the updates in this sheet stock analysis is going to be delayed. It's going to be based on my availability when I get time. But the Trade Together program, the updates are going to be more real time in nature. So now coming to you wanting to learn swing trading from me, if you want to do that, I would suggest you go and check out this website, this link of mine where I talk about my live training workshop. The next batch of the workshop is coming up from the end of February or the first week of March. I'm still deciding the final date kind of. So all the details of what I will be teaching is shared here. I will be teaching you my entire process. It's a 5-step process of identifying, monitoring, entry, trailing, exits, then past trade analysis. I have a model called the relative strength quant model, which is built by me from scratch. Took me a lot of effort, a lot of time to build it. And I use that as a first stage of picking stocks with good momentum. And then I follow up with more analysis on each stock every single day. So how to use this model, how to keep it up to date, how to maintain it so that it doesn't break. All of those things will be taught in my workshop. I will teach you about risk management, how to set up stop losses in different market conditions, how to book profits, how to identify your own trading biases. That comes in the trade psychology, how to manage your own biases. See, you cannot eliminate your biases ever because it's ingrained in your personality, but you can manage it. And the first step to managing your biases is identifying your biases. So what are those biases? How do you identify them? And then how do you manage them? How do you work with the triggers? And then how do you distance yourself from your trades enough to make objective decisions and observations? All of those things will be covered. Position sizing and capital allocation. Naturally, if you want to succeed in the market, buying stocks for the short term and then becoming a long term investor because there is the loss is not going to work for you. Over allocating capital, like buying 50% of your capital in one stock and then, fretting about the stock declining or market volatility is not going to work. Your mental peace needs to come, and that is going to come from proper positioning, position sizing, and capital allocation. Next is, of course, chart patterns, candlesticks, and indicators we are going to discuss. We are going to discuss support and resistance using zones, using trend lines, using EMAs. We are going to get into huge details on the relative strength index RSI. We will be covering RSI from a divergence perspective and a range shift perspective. And before you think you can Google and learn all of this stuff, let me tell you that while there is immense amount of knowledge out there, you will find very little material on range shift. I'm very surprised that something so profound and so powerful has not been covered quite as much in text. But also, I think this is a more evolving kind of observation and it works beautifully. So, I will be teaching you this. I'll be giving you exercises on how to develop your um, kind of your brain eye coordination and your hand eye coordination to be able to identify and work with range shift. It's very important. There are dedicated exercises which I don't perform anymore because I have already reached the stage where I can see the range shifts, right? I will teach you about using the trade tracker. I will also give you my version of the trade tracker that I've developed that is honestly the key to unlocking your own stock market success. And just like we're discussing Havells right now, there will be real time observations, exercises, assignments that we'll follow through week by week. And then I am also planning on making something like a inner circle where we can work on the RSQM together. But again, this will only be accessible to those people who show dedication and active participation in the classes and who show passion to become a full-time trader going forward, because there's no point of adding people to the inner circle who are not dedicated, right? And then if you join the program and if you are open to this, I would also like to have like live conversations on YouTube, or recorded conversations on YouTube with respect to these analysis. So it's always amazing to have someone to interact with when I make these videos, right? All right. Another last thing. So if you go back to my Telegram channel, there is a campaign running on right now since the market is bottomed out called Reversal 2025. So I think I forgot to include that in this. So I will just edit this. Use code reversal. Okay, let's rewrite that. Use code reversal 2025 reversal 2025 to avail 25% discount on the workshop. Limited period. Okay, so you can do this. I will also, I'm going to pin this as well, so you can find both the sheet as well as the program link easily by going to the Telegram channel Trade with Kavita. Now just make sure that when you try to find my channel on Telegram, if that's what you do, make sure that you write the spelling appropriately and join the correct channel, because what you will notice is there are some fake channels running with my name and these guys are like super scammers. So make sure you're choosing the correct channel and not associating with scammers, right? All right, so with that, I come to the end of this. Yeah. So with that, I come to the end of the very first video of the 100 days, 100 stock analysis. Now remember, this 100 days does not mean it'll be back to back. It'll be 100 stocks where I think there is enough material, enough analysis from scratch to share with you, to guide you, to build investment case on. I will also choose stocks where my own trading fails, where I incur losses, so that I can share the mistakes that I made, because I really think it is pondering upon the mistakes that we're making that we actually become good traders. So we'll also do that going forward. Okay, so I will see you in the next video or in the market outlook series, whatever happens first. Now, what is the market outlook series? Every Friday I discuss the chart of Nifty, Bank Nifty and all other sectoral indices in great details, because we want to stay ahead of the momentum, right? We want to put our money where the momentum is going to come, not where the momentum has been. So that's the whole idea behind the market outlook. I post that video anytime between Friday to Sunday, sometimes even on Monday. I used to do all of this live before, when I had time and autonomy on my time. I no longer have that. Just how you saw, like I was doing my video and my baby started crying. So I rushed, attended her, fed her, and then came back. Right. So this is why doing live sessions is not very feasible. However, if you do want to interact with me, just post your questions in the comment of this video and I promise I will get back to you. Okay. So with that, I will take off now. Thank you so much for watching this video. If you found it useful, give it a like, leave a comment, subscribe to my channel. It really makes me happy, okay, to see engagement. It just makes me feel that my hard work is reaching the right eyes, the right ears. All right. Thank you so much. See you in the next video.